I think it takes a little bit more time to build stuff in the context of Bitcoin, just because Bitcoin puts more tech onerous on the developers, but it enforces you to keep things really secure. Probably a lot of our listeners today know that there's been a ton of smart contract hacks in Ethereum. And in the context of DLCs, all you're really doing is you're enumerating all the possible outcomes ahead of time. So you actually know that, for example, the Bitcoin can really only move between the borrower and the lender. And when it can move, it's kind of like the question based on like the price. But at least you know that all the possible outcomes are known, and you can be very transparent about the security of the system. You can really verify the security of the system because you know all the possible output conditions.
Welcome back to Bitcoin Season 2. I'm Charlie Spears with Blockspace Media. I have a very interesting conversation with Shezhan of Lava, and we're going to talk DLCs, not downloadable content for video games, but rather the DLC structure on Bitcoin. It's probably something you're going to need to know about, and about his product, Lava. I'm not going to try to front run him here. I'm just going to bring him up, and we will talk about Lava. What's up, Shezhan? Thanks for coming to Bitcoin Season 2.
Yeah, thank you for having me.
So just let's talk Lava. I mean, like at a high level, we don't have to get too technical. Like, what's Lava and where are you in like the rollout phase of this new product?
So Lava, we offer Bitcoin-backed loans. So if you are a Bitcoiner, you don't want to sell your Bitcoin. I mean, I don't want to sell my Bitcoin. I know you don't want to.
I don't want to sell my Bitcoin either. Yeah.
Lava. You can actually borrow against your Bitcoin using Lava. And over the last few years, it's been proven there's a ton of demand to borrow against Bitcoin. Like 2.5 years ago, there was a ton of custodians that were offering Bitcoin-backed loans, massive companies, but they were custodial, so they required you to give them full control over your Bitcoin. And in the last 2-3 years, they lost tens of billions of dollars in customer funds because they took your Bitcoin, they gave you a loan against it, but then they started trading your Bitcoin, and then their trades also went bust. So they lost tens of billions in customer funds from rehypothecation, which is this act of trading customer funds. With Lava, not only do we offer you Bitcoin-backed loans, we offer you them in a non-custodial way where you can lock them in this Bitcoin smart contract called a DLC. You're never bridging them or taking bridge risk. You're locking them basically in another address, but you can verify when you borrow against your Bitcoin, when it's there, that it's not being traded, that Lava can't trade it. And you have cryptographic guarantees, not just legal or reputational assurances that we can't trade your Bitcoin. So that offers users a lot of security. And then the other thing we always want to do with Lava as a platform is offer the lowest rates and the fastest time to get a loan.
There's a lot to dig in there, and we'll kind of go piece by piece. But I think one of the most interesting things is, and I had a conversation last week with Rob Hamilton of AnchorWatch about Miniscript, and he used this term, smart contracts on Bitcoin. And I do think this is very interesting because the narrative in broader crypto is that Bitcoin is dumb, you can't do things, and yet you are here saying you can use a thing, which we might call a smart contract on Bitcoin, to accomplish things that look like activities you can do on other chains. Like, what is this? Is this a smart contract? And then let's get into maybe explaining DLCs.
Yeah, I mean, it's definitely a smart contract. But if you look at Ethereum, what smart contracts really are in broader crypto is just conditional payments, right? And really most smart contracts in the context of crypto, they're based on two primitives: price-dependent payments and then atomic swaps, right? So like a system like Aave in Ethereum, you want to atomically initiate a loan, and then you want to make sure that when it's there, when your collateral is locked, that there's like some price-dependent nature for the lender on the other side to be able to margin call the collateral if needed, based on a price like attestation or set of price attestations. And actually, what I think a lot of people just didn't realize is you can just build a loan engine on Bitcoin using DLCs, because DLCs actually power price dependent smart contracts in a more secure way than you can even get them on Ethereum or Solana. I can go into why the DLC system is very secure if you want me to go into the technical details. And so for
Yeah.
Lava,
Well, I was like, maybe we just touch on DLCs. Like, could you, like, we keep using this term, and I had to revisit like the concept in preparation for this. Like, can you explain a DLC maybe at like a fifth grader level, or to like a dumb Bitcoin maxi DCA maxi level, and then maybe at a technical level, like the easy version, the hard version?
okay, so DLCs, I'll explain it. So the guy who originally invented DLCs from MIT also invented Lightning, which I think
Shout out Taj, yeah.
a lot of more of your users are probably familiar with Lightning. And basically, actually, if you talk to him, the reason he did it is he saw all the things people are doing in Ethereum. He was like one of the core contributors actually to one of the Ethereum libraries before too, and he was like, "There's a better way to just do this on Bitcoin." But then no one really like looked at it. Our team, I think probably more than any other team, has really like built this library and done all these other things to make DLCs useful. But at a high level, what a DLC is I can maybe explain with an example. In Lava's case, if someone wants to lend you money against your Bitcoin, they want to do it in a way that if the price goes down a lot and you haven't repaid your loan or added more collateral, they need to be able to know that they can liquidate that Bitcoin, right? And they need to be able to basically, instead of, if they don't want to take full control over your Bitcoin, we need a way to have a price dependent smart contract on Bitcoin. So that's like TLDR, what a DLC is. You can lock your Bitcoin from one UTXO, like one Bitcoin to another Bitcoin. The other Bitcoin is locked under this condition that, hey, if the price goes here and nothing else has changed, no collateral has been added, it has been repaid, the Bitcoin can go to the lender, for example, basically getting liquidated. Does that make sense?
Yeah, it does. And you use this primitive then to build a whole loan system apparatus, which we can get into. But it's interesting that you say like this. I feel like this is a very Bitcoin season 2 theme, which is like there's all this stuff which people could have been building on Bitcoin in scale, and we haven't seen it. Like, why? Is this because we got a recent soft fork with Taproot a few years ago, or like are these primitives, are these mechanisms like just underexplored to date?
I think they were underexplored, but I mean, we're exploring them. So I don't know. I think if you look at it, crypto is like not that old. It's not like there's been like 50 years.
It can just barely drive now. I think Bitcoin's like 16 years old.
Exactly. Right. Like Ethereum, Aave really just grew in the last 3 years, if that makes sense. Like the Aave compound competition started like summer 2021, right? So it's like 3.5 years maybe. That's been playing out Ethereum DeFi. And like we've been building it. I think it takes a little bit more time to build stuff in the context of Bitcoin, just because Bitcoin puts more tech onerous on the developers, but it enforces you to keep things really secure, which I think is a positive trait. So I don't think it's been like that long. I think that in the context of me building it and our team building it, it doesn't seem like there was like a ton of time that people just missed it, if that makes sense.
Yeah. So how does Lava like use the DLC structure? Like, how does Lava use a DLC to loan against your Bitcoin? Talk me through like what technically happens, like when I take out a Lava loan.
Exactly. So the DLC is basically the loan engine for. So if you were using a custodial solution, maybe your Bitcoin was sitting in the custodian's wallet, and they would have their own like Web2 kind of loan engine where they would figure out the price and figure out whether to sell the Bitcoin based on like the price, right? Here, the DLC is our loan engine. So for us, we have to build the DLC technology, right? And that includes like these price servers called oracles. We've built this open source implementation of that, which is basically just a way to figure out the price of Bitcoin. And then I could get a lot into details on how that works if your users want me to, or if your listeners want me to. But that's the part of it. Then there's also just the whole, how do you set up the DLC securely? The nice thing about DLCs is probably a lot of our listeners today know that there's been a ton of smart contract hacks. in Ethereum. And in the context of DLCs, all you're really doing is you're enumerating all the possible outcomes ahead of time. So you actually know that, for example, the Bitcoin can really only move between the borrower and the lender. And when it can move, it's kind of like the question based on like the price. But at least you know that all the possible outcomes are known, and you can be very transparent about the security of the system. You can really verify the security of the system because you know all the possible output conditions. So I call it formally verified because you know all the possible output conditions ahead of time. Whereas in Ethereum, you might be writing a piece of code that is basically almost impossible to formally verify, know the security of, which is why you might see a lot more hacks because you don't know what you don't know.
Yeah, so you know that the money can either go to party A or party B, and not some party C who comes in and tricks the code or whatever. Yeah. Okay. So I've used Lava. I test Lava. I'll say that here. I think it's really, really cool. I bought some fun stuff with using a Lava loan. But like when I go through the Lava process, I send my Bitcoin where, who's the counterparty in this case, and then how do I actually get dollars deposited in my US bank account? This kind of mystifies me sometimes.
Yeah, you can imagine you have your own Bitcoin. It's in your control. We have an interface, like our own like wallet interface to it. Then when you initiate the DLC, now your Bitcoin's like in this smart contract, right? So it's there, and you've already gotten your dollars dispersed to you on Lava. So your dollars are on Lava. They're in the form of a stable coin. But we abstract all that away. As you've seen, you don't have to have any other tokens. You don't really need to know anything. You can actually, in fact, even request to have it directly sent to your bank account. So you could even never receive it to the Lava platform. It just sends it to your bank account. But if you received it initially as stable coins, then you can do a few things. So I know you've used it to withdraw to your bank account many times, and you can do that through Lava. Another thing that we've had people do is they've sent it from Lava to another like wallet or platform, let's say like Coinbase, to then go trade. So we've had people send it to Coinbase. We've had people send it to Fidelity to trade equities as well, which is pretty interesting. So you can do that as well, all once you've borrowed against your Bitcoin.
So like this is the world of like how you get banks and the people with the dollars to want to loan against Bitcoin. That's a bit of I haven't done a lot of research on this. Like I'm not very familiar with this regulatory landscape or like who wants to do this. Like whose dollars are being deposited in my bank account? Yes, I know they're my dollars, but like after the loan, but like who's the counterparty in this scenario? You don't have to be specific, but I'm like, who is the type of counterparty?
I mean, it's really just credit funds, and in the future, hopefully banks as well. Because I mean, it's the same people that buy loans from a firm and warehouse finance, loans from a firm and other like fintech startups. So people looking for credit opportunities, and I think that's a doable process. It's been doable for us, and really for us, it's making them feel even more confident. Not just like I think if we can make people feel really confident about a regulatory landscape and also about the security of our system. I think it's more secure than even using custodians. I think actually what we find is people are more scared about Bitcoin because the people who have dollars are more scared about not like the security of Bitcoin or whatever, but the liquidity of Bitcoin, which to me actually is the least, like it's a very low concern. Bitcoin's everyone in TradFi today, or not everyone, a lot of people in TradFi today see Bitcoin as this extremely risky asset that could have extreme flash crashes, but we don't really see that. Bitcoin's it's volatile, but it's also very liquid, and it trades 24/7, which is rare for an asset. So getting them really confident about the liquidity risk that they're taking, which is very minimal, is a thing that we're trying to get as good as possible at doing. Our loans are also zero loss, right? Like as a lender, you're not taking on credit risk of the borrower. You don't have to worry about them. You're not like making an unsecured loan as well.
Yeah, it's my cursory understanding of like lenders is like yeah, you can put up, your house or like business or some kind of like equity or something. But in the case of liquidation, like the actual transmission and transfer of those assets can get hairy. Whereas when you have like a bearer instrument, which is locked into a specific rule set, which programmatically delivers the asset to the lender, this changes the game.
Great.
Yeah.
It's even better. It's, in my opinion, better than lending against equities, right? So that is what we are, and I think we're doing probably the best job of anyone in the industry, but it's still like a new thing for these people, right? Because traditional credit funds essentially partake in very similar opportunities over and over again. They've been doing the same thing for decades. So this is like kind of like the newest thing for them to do, and making them feel comfortable with that is a challenge, but it's also a doable challenge. I don't feel like it's unsolvable.
So then who are your, I guess, like, do you have, when building Lava, do you have is it a two-pronged approach? Like you're trying to pitch to like the Bitcoin or the crypto native and try to explain this to TradFi? Like, or I don't know. I feel like as a former Bitcoin miner, I have had to navigate this this weird. It's got to be two different people to two different types of counterparties. Like how do you navigate this? How do you? I mean, this is a BD challenge. Like how do you solve this building Lava?
So yes, we have like a capital markets side like piece, right? We build not just capital market sales, but capital markets infrastructure to do like reporting and all these other things these lenders want. Then I think there's like the product side, which is like the protocol, the app, and then there's like the consumer marketing side. I think for consumer marketing, we've not faced a lot of challenges. There's a lot of people extremely excited about Lava and reaching out to us all the time, and that's been great. So it's been great that we don't have to worry too much about the Bitcoiners right now.
Like you built it and they are coming, that kind of thing.
Yeah, exactly. Yeah. So that's like it takes some stress from us. The product, I think we have a really great product team, and we've been delivering, as you've seen, the products come a long ways. I think we're shipping like updates like daily, right? So you've probably seen all of them.
I've seen each update. Yeah, I've helped discover a few bugs, which has been super fun.
Yeah, we're just
And
trying to nail down everything. And also, I think we should some more features since you started with on ramps and off ramps, and you'll have the card soon. Um, so that's the product side, and then yeah, the capital market side. We hired this guy. He previously was from a firm and kind of grew their whole lending ops. So we've been working on it and just trying to get all these lenders on, and it's been going really well.
so, I feel like you have already addressed this question, but I have to ask the catchphrase is, well, where does the yield come from? Now, it's not me, the user, but it's
Yeah.
like there's an interest somewhere. If you can, just in very plain terms, explain the interest component.
I mean, the interest it's pretty straightforward. It's when you borrow against your equities, you're paying interest, right? Because there's a cost to liquidity, and that's where the interest comes from. It's not like, I don't know. There's probably a lot of random. I don't follow a lot of the stuff people do in crypto anymore, but I know there's probably lots of like random interest games that they're playing. For us, it's a secured yield instrument.
So, there's a lot of different interesting components. It's a very simple concept. Take a loan against your Bitcoin, use a discrete log contract. You can have a couple outcomes, but you get around you talk about this stablecoin component, which is interesting. And on Bitcoin Season 2, we are not afraid to be honest about the realities that crypto rails can be very useful. Let's talk about the stablecoin that is Lava USD and how it plugs into the Lava ecosystem. Like, what is this? Why does this exist?
We initially started with dispersing loans in USDC. That was like what the protocol was built, and it actually you can still actually get a loan in USDC today. But by default, in like our user interface, everyone gets a loan in Lava USD, and Lava USD is just another like USDC. I wouldn't call it exactly a competitor because we're not trying to be a general purpose stablecoin, but it's like an app specific stablecoin, and it's treasury backed. Treasuries are held at BlackRock, Fidelity, Apex, and soon to be even more custodians, like treasury custodians. So it's just cash and treasury backed instrument, audited, regulated. Really, our reason for launching it was in crypto today. I this is it's like so surprising. Everyone's just going and using USDC and Tether when like you're just furthering the monopoly. They don't pass any rewards. They make a ton of revenue. They don't pass any of it to developers or users, um, and that's just like doesn't seem like we felt that it was worth building this. And you've seen all like some of the tech we've built around making on ramps really easy with it and off ramps. It helps us build a better product, and it actually helps our lenders feel a lot more confident about the security of the stablecoin because we can audit it in real. They can get audits in real time for it. And if you're a user and you don't want to hold Lava USD, you can swap it to USDC instantly. You can withdraw it to your bank account. The way I kind of think about it is that PayPal has its own like banking partner. They're not just going to use like Cash App's bank account, right? Like imagine if like Cash App's bank account was like everyone was just like using Cash App's bank account. That's not what people are going to do, right? Especially if you're a competitor like PayPal to Cash App. Uh, and I think that's almost like what everyone has been doing in crypto is just using like Coinbase's account. Because Coinbase, I'm pretty sure, owns the majority of Circle. Um, I think that's just like a bad business decision from a fintech perspective. And my perspective is that stablecoins are just payment rails. Like they're just new payment rails to move dollars. And like you like I think people like overhyped them a little bit too. Like for us, we just needed stable coins for the atomic swap stuff, and they provide instant disbursement of loan capital. And then a lot of people want stable coins because a lot of users will go trade with their stable coins, right? Because stable coins, with Lava, you can swap it to USDC, and then even with maybe in the future, you don't have to even do that. You can go swap it on like whatever Solana DEX or other DEX or ecosystem people want to go trade on.
So you've managed to capture the attention and venture funds that I've heard of, which I've not typically, as far as I'm aware, been associated with Bitcoin, let alone many crypto investments. Yet you're co-led. You announced a Series A last month, co-led by Coastal Ventures and Founders Fund. Like these are two titanous names in venture, in tech, fintech, and I've not seen them together. What attracts these people to Lava specifically? Like are they just seeing what you're explaining to me right now?
I think that this is Costa's first investment in crypto. And Costa and Founders Fund are really tight because Keith and Peter, worked together at PayPal, and then Keith was at Founders Fund. Uh, and I think it's also maybe the first deal that they've co-led before too. And yeah, we announced our raise. I wanted to work with fintech VCs because, in many regards, like I view this as a fintech. We use self custody and DLCs because they enable us to build a more secure and reliable experience for our users, more reliable and secure than us being a custodian or using custodians, right? And so that's why we use the self custody aspect. We have the capital to maybe become a custodian or even use custodians, but I actually think that this way is the most secure and reliable way to do it. But in general, I'm also a crypto minimalist, I would say. So I think like Bitcoin needs a blockchain and is like useful for that. And I think stablecoins are useful, but I'm not like, and I don't trade and do all these other things in crypto. And for me, I view it more as a fintech perspective. And these are like fintech investors. And that's why I wanted to work with them because we're executing a lot of the same things like a fintech would.
So let's dig into DLCs a bit. It just feels to me that there's you guys, and then there's some DLC structures in the ordinals world to like lend against your inscription assets. And I've been seeing a lot of what I call the smart people kind of start to be sniped by the DLC concept.
Mm-hmm.
Let's dig into DLCs a little bit more. Like you sent me, I want you to further DLC pill me if you
Oh, yeah.
can. Like, what are some of the interesting things that can be or might be built? Like what do DLCs unlock in the Bitcoin ecosystem?
I mean, honestly, I guess I might not be the right person to ask because like I said, I think I'm like a crypto minimalist, and the only things that I find like useful in the context of crypto are buying Bitcoin, holding your Bitcoin, borrowing against your Bitcoin, and then taking these dollars. I actually think stablecoins can be really great payment rails, and then using stablecoins for payments, like buying a house, card payments, etc. So for me, I'm not as I don't know like what else you'd want to build with
Well,
DLCs.
I mean, in that context, like, I understand DLCs may offer some privacy benefits. They
Oh yeah,
are pretty
yeah, they're like,
optimal from an on-chain footprint standpoint. Can you
oh
like
yeah, you want
explain
to go
those?
into all that? Yeah, I can go
Yeah,
into those things in the context of lava. So and it's gonna get technical,
go for it.
but
Yeah, this is the technical part. Put your head down or like turn the podcast up on 2x or whatever you want. Yeah.
okay. So and I've said some of this earlier in the pod, but I'll repeat it. So one, I can talk about security, right? With DLCs, you know all the outcomes of the DLC ahead of time. This level of like verification, formal verification, increases security versus Ethereum smart contracts. Another nice thing about DLCs, they're non-upgradable. I think you probably see if you're into crypto a lot, you probably know that a lot of smart contracts in other ecosystems have this like admin authority key. There was one that like Thorchain, which became insolvent recently, which the founder tried to like close the contract while it was like going bust. Can't happen in DLCs. DLCs also there's one part of DLCs which is really interesting is that the on-chain footprint is essentially minimal. With Taproot, extremely minimal, like as minimal as it can be. So you have in Bitcoin, if you minimize on-chain footprint, you also improve privacy. So it's way more private than smart contracts you'll see in other ecosystems. Extremely more private and way more scalable, right? And with DLCs, you can also do all these things that you'd want, like extend your loan without on-chain transactions, all these type of things. So extremely scalable, as scalable as it, like as a smart contract really can be. And then the other nice thing about DLCs is they give you optionality. So in Ethereum, if you use Aave and you have these like price servers called oracles, you kind of have to choose what the original Aave founder decided they wanted the set of price servers to be. In DLCs, each contract, let's say for Lava system, could have its own price servers. So for example, if Charlie, you're like, I just don't want Binance to be a price server for my loan. I want Coinbase, Kraken, and this Susquehanna to be a price server. You can have that, and it can be different for my loan versus your loan. And I think that offers a great level of customizability for borrowers. So I think they're just a very like beautiful system. They are secure, they're private, they're scalable, they give you optionality. I don't know if there's really anything that's really missing that you would want in like a primitive.
Yeah, that's interesting because I do do we call like a DLC loan? Do we still refer to that as self custodial? Like I don't give up custody of my Bitcoin, but it's
Yeah,
like locked into.
I'd call it more non-custodial. But then in Ethereum, people will like call Aave self-custodial, right? Which is kind
Yeah,
of interesting, because Aave is also probably actually I think Aave has like upgrade authority to it, which is interesting. But let's say like it didn't have an upgrade authority, like it was like more ideal or whatever, then they still would call it they do call it self-custodial right now. But I think the semantics maybe matter like a little bit less. And I think what matters is the fact that you can verify that you have confidence that there's no rehypothecation. I think that's like I kind of think about like what are the risks and how are you protecting yourself from that risk? How do you protect yourself from like technical risk, rehypothecation risk? And I think those are I think what matter, and you get that here.
so I'm really just limited to Oracle risk, which now in the year of our Lord 2025, like we have pretty robust oracles, and like we literally, now use those for NASDAQ, and you're saying that I can even, if I wish, provide my own Oracle probably some
That's something I could
buffers.
also go into a
Yeah,
little bit. I think I made a tweet. I don't know if you saw it like a couple of days ago about oracles. I tweet about it like every
I
few
did.
days.
Yeah, but jog my memory here.
Okay, so this is another thing I didn't bring up just a second ago, but oracles in DLC land versus oracles, let's say, Ethereum land. In Ethereum, your oracle has to attest to the price. Like it's a server that's attesting every block to the price of an ETH, let's say, which introduces this concept of oracle MEV. So that hurts reliability. You've already seen exploits with that in Ethereum or these other blockchains that have very similar constructs to Ethereum, like Solana. So in DLCs, no on-chain Oracle attestations needed. It's all happening off-chain. So more scalable, more reliable. The oracles also don't know anything about your contract, so a lot less like rug risk because they can't single you out, which is not true in Ethereum. Like I have a friend, he runs one of the chain like oracles, so he knows exactly what's going on, and he gets paid a lot of money for it. Um, can't really have that in Bitcoin land, which is greater, I think, from a reliability and security perspective that you find in Bitcoin land versus like Ethereum land.
So I guess the last thing is I was trying to dig into some of the new concepts that you clued me in on, this idea of DLC factories and channels. This is starting to sound a lot like, again, another Tad's Darija invention, Lightning. Now you have Lightning channels and factories as things which we could build. Um, what's a DLC factory or DLC channel like?
Yeah, I mean, users don't really need to know about this because it's all like in the hood. But when you
Well,
take
what
a
does
look,
it do? Yeah. What could it look like to the end
I mean, it
user?
already works today. But you can just take a let's say you have a loan and you want to extend it. It's just giving you the ability to like keep a loan going without on-chain transactions, if that makes sense. Uh, and it just uses like actually someone from our team did the factory thing. I think I messaged you about that. But DLC channels, which Tebow also working with us made in like a while ago, it's another way to do it. So there's just two different ways to basically create transferable DLCs that are off chain instead of on chain.
So,
And
you
this
know,
isn't
you
something. Well, I wanted to clarify. This isn't something
yeah.
like maybe it's not like a new feature necessarily, but it's just like new ways that we're thinking about like optimizing like on chain cost. Does that make
Yeah.
sense? Yeah.
Yeah. So you touched a bit on payments, and if we want to roll the clock back on our other podcast, the Gwart Pod, shout out
Mhm.
Gwart. I heard you guys talk a bit about payments, and I think you said something like you think that we'll be able to figure out Bitcoin payments sometime. Don't know if it's sooner, later. That's less relevant. Um, you know, it's interesting because this past couple of years, I feel that the narrative for Lightning is that Lightning for payments has kind of hit headwinds in the face of some Lightning realism. Maybe
Yeah.
that'll change, but like, what is your take on this whole Bitcoin payments topic? Like, it's not. It used to be part of the core Bitcoin conversation back in the day, with the block size war. There's a bunch of baggage with that, but like, talk Bitcoin payments to me. What does this look like in your mind?
Yeah, I mean, I don't want to say something, but I think Bitcoin payments is a very interesting concept. You know, for like years, that was my main like focus and something I was like most interested in. It's just not something I think if you saw what I think people want to do with Bitcoin today is buy it, hold it, borrow against it, and take their dollars and spend it. It's not spend Bitcoin really, but I think that there's a lot of great work that's already being done to make Bitcoin payments. Like you can already do Bitcoin payments technically in a custodial context, right? You have eCash custodians, all the Fediman stuff, and it's not like I don't know if people are not using those because they're custodial today. Does that make sense?
Yeah, it's
And
kind of mystifies me, like why some of these haven't taken off as much as maybe other crypto rails.
I mean, I just don't want to spend my Bitcoin. I don't think
Yeah,
a lot of people do. I think it's just like an asset that today everyone believes is appreciating at like, or is anyone holding Bitcoin today? It's probably not like it's appreciating at 5% year over year. It's like we all think it's appreciating like a lot over the next decade or even 2 decades. And so I don't think there's a lot of incentive to sell Bitcoin or spend Bitcoin, especially if you can borrow at like a lower rate. But I think there will be like one day maybe more demand to do Bitcoin payments once Bitcoin is like a bigger asset, right, than it is today, and once it's more stable in price relative to like some basket of goods. But that's just not today. So I think that's probably like the main thing that's holding it back. And whether or not we can get fully self-custodial, I mean, I think like the tech will follow for sure. If there's demand for something, I think the tech always essentially will get built up.
Yeah, and this gets into like, okay, so maybe the average Bitcoin user and I myself, like, I like paying for things in Bitcoin out of novelty, but it's just not the same as using Visa or similar payments networks. But
Yeah,
if we imagine that Bitcoin does become widely adopted, more so than just a couple 100 million people today,
yeah,
um, then like at some point, if it does transition to payments, like this could we could find ourselves like wanting Bitcoin to work for payments, and yet because it's now gotten very big, it's like hard to affect Bitcoin at a protocol layer to improve that. Maybe we don't need to. I don't know. There's a big conversation, but like,
yeah.
is there a balance between designing for payments in the future and maintaining Bitcoin's core principles? Gets into the software conversation. I'm kind of leading you into this. Like,
Yeah,
go here.
I yeah. For what it's worth, I don't really think about Bitcoin payments too much anymore. Like, I'm working like every second of the day on building Lava, and that's not like a feature that we're really building for today. We might build for it in the future. Like a lot of our team comes from Lightning. By the way, we just hired someone from Lightning Labs, and a lot of our team's been in Lightning for like as long as Lightning's been around. But yeah, I guess I haven't been thinking about it that much and what could be done to optimize Lightning. I think that with covenants, if I could summarize the discussion, it's probably a matter of which covenants to bring in and when to bring them in, and then also what downsides do they provide, right? And I think probably the biggest downside that people worry about is like all the MEV stuff, right? Because it's like a centralizing vector. It's like been centralizing in Ethereum and Solana, and like this worries about that on Bitcoin. I don't know where I stand on it, so I'm not going to give you like a full.
You're just too busy building, which is the best thing to hear. Honestly, I think a lot of us who chime in on a lot of the software discussion, we're not very busy building, so we've just got way too much free time on our hands to have opinions on things.
I think for me, it's also what would might be useful. I guess I don't think about it in the context of Bitcoin payments too much. Probably like the best guy there is like Matt Corallo or someone like that who's working on Lightning. I see him all the time here in New York. But in terms of loans and like DLCs, probably CTV would be the most useful. So basically, there's like some time that it takes to initiate a DLC. For us, we've done a lot of optimizations. Our phones are getting a lot faster and stuff like that. So we can do like on average it takes us like 5 seconds or less to initiate a DLC, but with CTV it would be like way faster probably. So that would be like a useful improvement. But I'm not like going on Twitter and shouting about it because it's not like the constraining factor to what we're doing today either.
So some of these covenant proposals, CTV in particular, could marginally or just improve the overall process. But you're not like sitting here like begging for a soft fork to happen. It's also, it's whose job is it to advocate for those things?
Yeah, exactly. Like if there was there's been. I mean, yeah, I just don't want to like beg about it and I like go be political. It's like a very political job, and I'm not like the best at playing politics, and I don't enjoy it. So I just want to take part in it. But if like the community decided to introduce a upgrade, then I'd definitely look at it and see if I could use it for something.
So let's round this back. Come back to Lava here. What does Lava look like in 2025? I know you've got some fun things coming, but like, where do you think Lava goes over the next year?
I mean, for us, I think we're already in line becoming the biggest Bitcoin-backed loans company. And then my vision is to build the best finance app for Bitcoiners. So a place where they can not just borrow against their Bitcoin, but they can buy Bitcoin directly, spend from it, and make it self-custodial. And I think that's like our vision is really executing on that. And I think we are the company executing on it. And the goal really is just the reason I got into Bitcoin was actually also probably why I'm interested in this more so is like the savings perspective, right? Like I grew up in India, my parents are immigrants, spent a lot of time making money, but they didn't know how to save money. And I think Bitcoin actually is like savings technology. I think it's the only savings technology. It's scarce, reliable, and a globally accessible savings asset. I think everything else is like you could even consider investing because you're always trying to beat Bitcoin gains. But I think Bitcoin is like this savings default. And for us, it's building the best way for people to save in Bitcoin and spend in dollars and really maximize their savings. Because if you can borrow, you can actually have more Bitcoin, you maximize your wealth appreciation, which can help you grow faster towards financial freedom.
So I've had a very good positive Lava experience. I have heard the same from other people. I look forward to trying out a lot of new cool stuff you're shipping. Final thoughts on this conversation, Shezhan. Where can people find you? What should people be looking out for? And how does someone listening to this poke into Lava and see what you're up to?
Yeah, I mean, the best way to reach us is hello@lava.xyz. We're building out like a whole client services team so that we serve these Bitcoiners. Like our goal is to serve also mostly all of our clients are like high net worth. So serving these high net worth clients. So if you guys want to get in touch, just email hello@lava.xyz and then follow us on Twitter and visit our website as well.
Cool. Otherwise, Shezhan, love seeing you. Probably see you here in person at one of the conferences we organize or when I'm in New York City next. Otherwise, thanks and see you around.
Thanks for having me.